I'd like you to know who the other folks are that are involved in the Elgin version of the Apprenticeship Network. The Elgin Business Resource Center is one of our partners, as is Employment Services Elgin, as is the Chamber, and as is Fanshawe College. And to further continue along that path, I'm going to introduce you to a gentleman whom I've had the pleasure of working with ever since he's arrived in St. Thomas, which was not that long ago. Ross Fair is the new chair of the St. Thomas Elgin campus of Fanshawe. Ross, good morning.
Good morning, ladies and gentlemen. It's my absolute pleasure to welcome you here to our campus. We're thrilled to have you here this morning and to be a part of the Apprenticeship Network. Our mission is to contribute to the economic growth of our region by providing graduates who have the skills necessary to serve the needs of our business community. The campus has been known primarily for our expertise in the precision metal cutting trades at the post-secondary diploma level and with our pre-apprentice and apprenticeship training. But we're continuing to look at the needs of the labor market and continue to innovate, most recently with the opening of our Renewable Energy Technicians program. So we're continuing to reach out and work with this community and with you in business to meet your labor market needs going forward.
Hi, I'm Diana Mulligan. I'm the Employment and Training Consultant out of London, and I've taken over for Keith Vardy. So some of the employers out there would know Keith Vardy very well. He was the employment and training consultant in this area for an apprenticeship. It can take anywhere from 2 to 5 years, depending on which trade it is. The hairstylist trade is about a 2-year program. This is on average, and it just depends on the apprentice as well. And then up to 5 years for like electrical or plumber. Some of the construction trades are longer. So apprenticeship spends about 10 to 20% of their time at a community college such as this, and I don't know if some of you haven't seen the precision machining labs here. They're very well set up here, wonderful training that they get here, and so most trades are at a community college. We do have some that offer them at either private or unions. There's other options as well, depending on the trade.
Derek Mitchell is with us, and Derek is a specialist in tax, and I guess his role this morning is to prove that the phrase tax benefit is not an oxymoron. Ladies and gentlemen, Derek Mitchell.
Thank you, Bob. For those of whom I didn't get to meet earlier on, my name is Derek Mitchell. I'm a chartered accountant and manager with Graham Scott Ends. Graham Scott Ends is a public accounting firm with offices in St. Thomas and Aylmer. We have 10 partners between both offices, 2 of whom are tax partners. We have 15 professional staff with CA or CGA designations, as well as numerous students going through their respective programs to get through CA or CGA. So I've been asked to come here and spend approximately 10 to 20 minutes to talk to you about tax and how tax relates to apprenticeship incentives. I know tax is a word that inspires a lot of emotion in people, either good or bad. Usually the bad revolves around something like, oh, expletive, I have to get all my receipts in order and all my T-slips and get it over to my accountant, and I anticipate to have to pay more money to the government. The good side of it is usually just people expect to get a big refund. So I'm hoping we can focus in on the good side of tax, because we are talking about investment tax credits, and they can be quite substantial. Bill Graham is the managing partner of Graham Scott Ends, and he was initially asked to come here and speak to you on this matter. And if any of you know Bill personally, it would probably take a little bit more than 10 to 20 minutes. It would probably take more like an hour and 10 to 20 minutes. So I'm going to try and stick to that timeline and just really focus in on the apprenticeship job creation tax credit and the apprenticeship training tax credit, because those are the meatier tax credits from the employer side of things. I can also talk about tax credits from the apprentice side if we have enough time and if people have questions. So before we get started, I just wanted to ask everybody here if there are any employers that have claimed these credits before? We got 1, 2. Yeah, okay. That kind of agrees to my experience from a tax professional. So when a client comes to us and gives us all their information, usually it's at the end of the year, and if you only deal with your accountant at that time, it's usually too late to then go back and say, oh, you could have hired an apprentice and been eligible for these credits. So it is surprising from my standpoint that I don't see more of this because they are so substantial. You would think that people that are eligible to claim these credits would claim them. And I actually just ran into a situation not too long ago where one of our clients was eligible and they did have the apprenticeship contracts. Everything was in place, they just didn't tell us. And then so we would do their tax returns and file them, and the years went on, and for 2009 and 2010, they could have claimed $20,000 for the training tax credit for those 2 years because they were at their maximum for the one individual that they had. But there is a time limit with claiming these credits. So by the time they got to us and it became evident that these credits were available, it was too late to claim them. So they left $20,000 on the table in the hands of the government, which could be better spent in the hands of a small business owner. Okay, so I'm going to jump into the first credit, job creation tax credit. It was first introduced in the 2006 federal budget, probably to try and catch up to the provincial, the cooperative education tax credit. It's non-refundable, and that is different from the apprenticeship training tax credit, which I'll talk about later on. So basically that just means that it's going to bring your tax payable to zero, but it's not going to create a refund for you. It's similar to your personal tax returns that you have non-refundable tax credits for tuition, stuff like that, through non-refundable. You can claim these credits for wages paid on or after May 2nd, 2006. So this has been around for 7 years or so. It's not anything new, but it's still definitely worth talking about because you can claim up to $2,000 per year per apprentice, and that's not capped on however many apprentices you have. It's however many apprentices you have at 2,000 is the maximum. How that is calculated is it's based on the eligible wages that you pay your apprentice in the first 24 months of their apprenticeship contract. So the rate is 10%. So basically if you're paying your apprentice, and this is probably pretty low, but $20,000, you're already at the maximum to claim that credit, which is $2,000. And again, the time limit is 24 months. As we talk about the training tax credit, you'll start to see how much better and more generous that one is. Also, it is worth noting that you would think that, so if you can claim it in 24 months, the $2,000 per year is the maximum. You would think that $4,000 is the maximum that you can claim, but that's not true. You can actually claim more, depending on if your fiscal year for your business is different from the year of the contract. So there, like, I'll give an example, and I'll do a little error diagram, that if this is January and this is December and that's your fiscal year of your company, if in the middle your contract begins, let's say, July 1st, so for the first 6 months of that year, if you're paying somebody $36,000, that would translate to an $1,800 credit. For the next full year, you'd be at $2,000, and then the last 6 months of the 24 months would be another $1,800. So you could get up to, I mean, it depends, but in that example, it would be $5,600. So it's been around for a while, like I said, but it's definitely something worth noting. I did also mention before about that client that just ran out of time. So the time limit on that credit is basically a year and a half. So if your fiscal year is January to December 2012, you have until June 30th, 2014 to be able to go back and make that claim. So you don't want to leave it very long. So the proper tax treatment of this credit and also the training tax credit is that you get a 1-year deferral on the credit or the income that you would get. So if you claim $2,000 in 2012, it would be taxed in the following year. So you get a 1-year deferral, which is nice as well. I've been talking about corporations, but an individual who has their own business, a sole proprietor, can also claim these credits as well. The apprenticeship training tax credit was first introduced in 2004 from the Ontario budget. So at that point, they decided to break out the apprenticeship component from the cooperative education tax credit, which I think makes sense. This credit, on the other hand, is refundable. So unlike the federal job creation tax credit, the provincial training tax credit is refundable. So it would bring your tax payable to zero, and then anything extra would be refundable. I guess I should have also noted with the job creation tax credit, the piece that you don't use in the year, you don't lose it. You can carry it back 3 years, or you can carry it forward 20 years. So you're not going to lose it, but the refundable credit is better because you get it all in 1 year.